The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, we saw the soybean market, the star of the show, on Thursday after the USDA released their October World Agricultural Supply and Demand Estimates report. What did USDA have to say with their numbers, and how did it impact the market trade overall? We're going to talk about that today and get market perspective and analysis from Bryan Doherty, Senior Market Advisor at Total Farm Marketing. And Bryan, great to have you on the program and have a conversation with you as always. Busy day in the markets on Thursday for sure.
It was, Jesse, and it was, nice to see some volatility return. It gives a lot of opportunities for not only just traders, but for farmers and just everybody involved. So we don't like to see it too wild. Today was pretty interesting, though. And the big news there, or the big event today, was just a really good push in the soybean futures market. In fact, technically, it posted what we term a bullish key reversal, which just means on the overnight trade, we were actually lower than yesterday's low. And today we had a higher high and a really strong gain. Not a dramatic change in the numbers. The carryout number is the same as last month, but they did lower yield a little bit. Reduced exports again. That's kind of one of those things where you're like, oh boy, if they just stopped doing that, this bean market could really have some wheels under it. But the world numbers are still what I'm going to call adequate. But slight reduction in the yield. And the market was expecting 49.9 bushels an acre and came out at 49.6. And the big news was probably just the carryout. I think there's a big concern that might edge up toward 270, 300 million, back to 220, back where it was.
Mm-hmm. Yeah. And to your points there, in the soybean number, with those ending stocks staying unchanged and seeing the yield come down a little bit. I know they added some back to crush. They basically gave back 10 million to crush that they took away last month. So some interesting calculations from the USDA and largely too on the corn and wheat side. We could talk more about this in a second, but it felt like corn and wheat kind of just followed the soybean trade to some degree on Thursday, Bryan.
Right. So even with the numbers in beans, it was kind of a slow start, kind of a tepid start. And I do wonder if the bean market went pretty defensive here early in the week. If the traders who were short were just waiting on this report to see if it was going to add some additional weight to confirm their position, or if it wasn't a bearish report, maybe start thinking about pulling out of these short contracts that they've been in since $14 or somewhere from 14 down to 12.5. That's a big drop off.
Mm-hmm.
That same time period. Yeah. Same time period, you saw corn not move at all over the last 2 months. So I think the trade might have been pretty quick to start moving out of some of these short positions. Historically, first week of October, you generally want to be long soybeans, not short.
Well, and it feels like, too, with both corn and soybeans now, after Thursday's close, we're tested some overhead areas of resistance. I think $5 in D's corn and 13 here in Novi beans. If you look at charts after the close on Thursday and think about things, that feels to me like our next key areas that we're going to have to see if we can break through some of those overhead resistance levels, Bryan.
Right. So here's what the bulls will argue. They'll argue in December corn, there's a little gap left right up around that 525 area. So they'll look for that market to try, and if it can get through 5, get to there. The problem they're running into right now, I think reports from the field are that the corn crop is probably running a little better than farmers expected. So whether or not that's baked into the USDA numbers or there might be a revision upward next month, I think that's where the debate starts. 18% of the crop rated poor to very poor. That alone makes you kind of wonder if we can even sustain 173 on a yield. But as far as beans, right, that big $13 mark, once we got underneath that the first time around, really hard to come back above it. and we're still struggling with that. So even though we had a great day today, we did tail off a little bit toward the end, and it does make you wonder if farmer selling might pick up now, because they've got to make a decision sooner or later. Do I store beans or store corn, or what do I do with this? Or do I sell beans on a basis and move them to town? Those beans are still going into the pipeline. There's a cost to holding, and it's more per bushel on holding beans than it is corn.
And to your point, there's a lot of farmers that I think they're even storing both right now if they have the on-farm storage, just because they're kind of waiting to see it and make that decision. But to your point there, Brian, gonna have to make that decision sooner rather than later, especially for folks who might be running out of storage space on the farm.
Yeah, and we're going to rapidly get there. It won't happen in the next 2 to 3 days. It looks like most of the central northern Midwest is going to get a good soaker, but the 6 to 10 day
Yeah.
forecast looks dry after that. And to your point, this harvest is pushing along. I'm guessing after today or tomorrow we'll be over 50% in beans. And then corn I guess we're running about a third of the crop, but all that's going to pick up here in the weeks ahead. We're getting to that point where as they talk to farmers, they're not sure what day of the week it is, or even what time of day it is, or even after the
Mhm.
report, I had some calls asking, "Is there a report today?" So, so they're just running wide open and doing what they do best, and so we'll see. But harvest will push along. Historically, both of these markets, so corn and soybeans, if they don't push down by now, they have a tendency to hold, maybe come up some. There have been some years where we get a secondary low in late November, early December, but we're at pretty low prices for that to occur. Typically, that happens when we're a little bit higher relative to the contract lows, in corn in particular.
Well, and to your point, farmers run it hard, and it is National Farmers Day on Thursday, so we tip the cap to the folks who are out there feeding the world and staying busy this harvest season. Brian, the wheat numbers, I know the U.S. ending stocks came up to 670 million bushels. That was largely based off the small grain summary at the end of September. And then we saw the global numbers. There was a few tweaks there. You look at the wheat numbers overall. Would you say neutral to slightly bullish? Maybe. What's your thoughts with the wheat side?
I'm going to lean toward first of all the numbers in the U.S. Today's number did come out larger than the average pre-report estimate, but it's not a big enough number to say, well, that's bearish at these prices. The wheat market
Mhm.
actually had a good finish today, so we have to give some credit due where credit is due. And so I think all of the markets now, corn, beans, and wheat in particular, are going to start stepping back a little bit from the U.S. and starting looking globally at what's going on around the world. And when you look at Europe, when you look at Australia, these are some what do we want to call it? Some points that if you're a worldwide user of wheat, that is, you could buy wheat anywhere. I'm starting to wonder if the world isn't reflecting that the crop may have maxed out, size may have maxed out. The market seemed to be trying to tell us that here lately with some increased volatility. We had a real sharp downturn at the last day of the month, if you might remember, September 29th, and then a real strong upturn the next day. Some volatility and then a really nice posted, very impressive bullish key reversal on the wheat contracts today. Maybe some would argue a double bottom. So a little bit more optimistic and enthusiastic kind of about the global picture. The wet rag over the market, of course, is the U.S. dollar up again today.
Mhm.
Did peel off some here this past week, but these economic indicators are still suggesting that the rising interest rate approach hasn't really slowed it down fast enough or quick enough here. So I think it'll get a little bit more, as they call it, hawkish in subsequent conversations, which means likely to increase interest rates.
And to your point, both the consumer price index and the producer price index this week coming out a little bit hotter than expected. And I know, too, watching the crude oil market, all the turmoil going on in the Middle East, and that's having a bit of an impact. A somewhat bearish inventory report for crude oil on Thursday. What's your thoughts with how crude is impacting the overall commodity trade?
Yeah, we noticed that too. That all of a sudden it seems like, I don't know if it's just past the Labor Day weekend or just kind of head into October, that all of a sudden demand is starting to diminish, and we're kind of at that window where if the demand doesn't come from driving or processors, processing for gasoline, they're really not into the heating season yet. So we can kind of see where you might see some projected slowdown in demand. But to your point, the crude oil has been volatile, recently peaking over 90. Now the interesting part there is we're at 83 on November. So even with the turmoil, we're still seeing some pullback there, which is kind of interesting because it looks like all of the fundamental ducks are in order for the market to maybe head back to 90. And as some reports are forecasting, maybe even $100. Um, you got to think too that $80 plus crude ultimately impacts soybean oil and corn prices as well. It just seemed like corn separated itself from oil, beans, wheat, the last 2 weeks, 3 weeks sideways. But now these other, as I said, world influences and markets may start to have more impact.
Well, we're having a conversation today with Bryan Doherty with Total Farm Marketing. Bryan, let's talk over in the livestock trade a little bit. An okay day in cattle, hogs as well. A little bit of green on the screen there. I know we did get some updated livestock protein numbers in the WASDE. I didn't necessarily look through them too hard. Your thoughts, though, on just the overall tone of this protein sector, cattle and hogs, to start here as we near the end of the week.
And in disclosure, so quickly after the report, I haven't had a chance to get my hands around those numbers either. But the futures market did, and it looks at this, and so what I think we'll find on whether it's this report, but in subsequent cattle on feed reports, is that this is a big long-term supply market that we've talked about for some time. The question is whether demand can hold up. And we had sort of a tired-looking market until yesterday. Yesterday, we posted what's called a bullish key reversal. I talked about that in the wheat market. Really, really impressive day yesterday. But the key really is follow through. And so we saw that again today. So looks like the market's made a correction. It's following through. The bullish, if you're bullish, though, you really need to see this market. We broke a downward trend line on the December contract just to pinpoint a spot. You really need to see a big close above 189 or 187 right now. So that's the technical push. If we can get above that, then expect to retest to the highs and new contract highs. Time of year wise, typically here in October, this is when you want to own cattle. The seasonals are higher in cattle from here to April. The question that you and I've had before is, can demand hold up in this environment? Like you said, the CPI number, these are numbers that say the consumer's probably still going to spend money. Whether they spend it on beef, we'll see.
Very, very true. Very, very true. I know the dairy market too. I was looking at the trade on Thursday, seeing some green on the screen there, especially class 3 milk futures. Let's throw dairy into this overall livestock protein conversation. What's your thoughts on the dairy market this week?
As much as the dairy market continues to look sluggish, it doesn't look bearish. So we have days like today where the market's up 9 to 15 cents. You look at the back months, you can start January and beyond, still all over 18. Like to see that push over 19, maybe toward 20. But I think to do that, you'd have to see cow numbers come down on subsequent milk production reports. I think you will. We've talked about this before. One of the reasons I think the market gets disappointed in the dairy industry not liquidating cattle is because if we go back to the beginning of this year, you had higher prices to work with. And between insurance products and farmers hedging and just defending, you can get through periods of this for longer. Now you've got high cattle prices and you've got low milk prices, or at least low enough to say, hey, do we really want to expand the herd, maintain the herd, or is this when we kind of sharpen our knife a little bit? I've got to think the production numbers from cow numbers, that is the cull numbers go up, cow numbers come down, heifer numbers in the slaughter mix go up. There's good money in that cow heifer, moving them to market. Ultimately, that helps the milk market. I'm not a crazy bull in milk, but I think we've got demand coming. I think the cheese buyers have been very selective and tepid in this economic environment, but yet prices have come down. This is their time to kind of step back in and start buying aggressively for the winter season.
Well, great thoughts as always, Bryan. I know it's been a busy, busy day for many of us who follow the market trade. Any final thoughts you would share for folks here, just as they kind of take stock and reassess now that we've got the October WASDE come and gone now, and obviously we have to see how we finish out the week. But What's your thoughts? What do you want folks to remember as they look at their marketing plan right now?
Well, I think they need to look at current prices for them and monitor basis and develop strategy that makes sense. For example, real quick, talked to a guy this afternoon about he's got beans that he either wants to lock a basis and then he can move the beans and get 70% of the value, or he can store the beans and pay 10 cents a bushel a month. And so it's expensive to store, especially commercially, and calculating your interests and those things in there. So the point I'm trying to make here is kind of push a hard pencil to your different alternatives. In this case here, he's going to do one of two things. He's going to lock the basis and take the market risk, but not the storage cost, or he's going to eliminate market risk, sell the beans, storage risk, and then retain ownership with an option strategy where his risk is fixed. He's got to decide which one lets him sleep better at night. But big picture perspective, keep in mind the markets are always volatile. Look for opportunities. I still think in the grains, we're big picture still in the long-term downtrend from May of last year. So we still feel rallies as selling opportunities. Corn carryout at 2.1 billion is heavy. It's not a bullish number. It's still heavy. But the trend started to go the opposite direction. Instead of carryout getting bigger, got a little smaller. Beans were neutral. So I guess I'd leave the listeners with rallies still need to be viewed as selling opportunities.
Well, Bryan, great stuff. If folks want to reach out to you and the team there at Total Farm Marketing to and have some questions answered, get some advice, what's the best way to reach you?
The best way is with a phone call, 800-334-9779. Otherwise, drop us an email, Bryan with a Y at totalfarmmarketing.com, or look at our website, totalfarmmarketing.com. Got a lot of great resources there and ways for you to connect with us.
Bryan, always appreciate your time and conversation here with me on Market Talk. Thanks so much for joining me. Have a great weekend. We'll talk to you next week.
Jesse, thank you. I much appreciate it.
Bryan Doherty there with Total Farm Marketing. That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.